So it is no secret that I've been absolutely crushing it on the swing trading side of things and with my option selling, and I am armed with these same tools that you guys have. So in this video, I want to break down the only indicators that I actually use when trading the markets. Now, these are the same indicators across my swing trading and my option selling, so you guys will have a good look into both. Now, what that means obviously is, if you're here for swing trading, this applies to you. If you're here for option selling, this also applies to you. This is my chart setup. This is all the indicators I use. We're not gatekeeping a single thing. We're going to break down each of the indicators, how I use them, and what ways I use them, and how I frame this around all my trades that I take. Now, I haven't made one of these videos in a while breaking down my indicators and my chart setup, so I think this will be very beneficial for whether you are new or a returning watcher. But that being said, let's jump straight into it. Now, one of the most basic indicators that I use is going to be these pivot highs and lows. Now, this is the most simple indicator that I use. All this does is merely tell me where the market has been, where it's going, by just plotting the higher highs, higher lows, lower highs, lower lows, and just plotting these with the actual price of them. Now, what I'm using this for is essentially just a visual cue. I don't have to go in and actually go, oh, where is this high at? And see, oh, it's at 277, and I have to mark out 277 here. It is merely just here for a visual cue for me to see everything, and there's really nothing more to it than that. So how this applies to my strategy, you guys know specifically with option selling and my swing trading, these strategies are very similar. And in a case like this, where I like to have my entries about 5 to 10% off the most recent high, what I'm able to do here is I can just see where that is, and I can measure that. You can see to where my share prices are on Bloom Energy. That is a 14% drop from the most recent high. Obviously, that would fit my system. So for me, this is just a visual cue for me to say, oh, well, there's the most recent high. These are the all-time highs right here. It's just visually more appealing and easier to spot for me. There is really nothing more to it than that. It's probably the most basic indicator that I use out of all the ones that I have. It doesn't hold as much weight as the other ones, but it is still there for a visual aid for me to, visually see everything. And obviously, it's not really used much more than that, but I think it is just one of the easiest and seamless ways to identify, oh, swing low, swing high, swing low, swing high, swing low. So that's really all it is. Just a quick breakdown of that. It is, like I said, we're going to start with the easiest one first, but the next one I want to jump to is going to be the 200-day SMA. Now, this one is where we get a little bit more interesting here, I will say. So with the 200-day SMA specifically, the official definition is something like a technical indicator that tracks an asset's average closing price over the last 200 trading days. Now, the way I use it is of the sorts as well, but what I personally like it for is if we are trading above the 200-day SMA, I have a bullish confirmation. If we are trading below the 200-day SMA, we have a bit of a, needed a fundamental catalyst to take this trade. So let me go a little bit more into depth of this. So obviously, this tracks the last two closing price of the last 200 trading days. So this is a great way to spot a trend. So obviously, trend setting is massive for a trader. If you don't know which way the market is going, you're probably not taking a trade at all, or at least I hope you guys aren't. But specifically with this 200-day SMA, I like this as a layer of confirmation for me. So once I'm finished actually doing a lot of my analysis, that is when I go and check the 200-day SMA, where we are relative to that. If we are trading above it, that's me saying, oh, I'm very happy with that. We have a bullish confirmation that the higher time frame trend is still intact. And as you can see, when we trade above it, we are considered to be more bullish. When we drop below it, that's where we start getting a little bit uninterested. Obviously, this has moved. It is currently moving with, the price levels that we're at now. But you can see how when we test it, we bounce off it. And I wanted to highlight, I purposely did this on Bloom Energy because I wanted to highlight specifically the most recent price action here. You can see how we came and tapped, came below. We ended up reclaiming that and pushing right off it. Then again, literally yesterday, we bounced straight off the 200-day SMA perfectly. So it is one of those things where I know some traders that, use it as more of a bounce play where we come and touch the 200 SMA, and if they're still bullish on a stock, they use that for their entry and continue pushing up. I don't really use it in that way, and that's why I wanted to focus a little bit on it. It is more of an indicator to me of if we are trading above that, I have some kind of bullish confirmation in the trade. It's just an extra confluence stacked against everything else in my system that tells me, yes, the higher time frame bullish trend is still intact. When I'm taking a trade like on Bloom energy specifically, where from all-time highs all the way down to where we're trading at now is about 38% off all-time highs. So when a stock has dropped 38%, you do have to ask yourself, is something fundamentally wrong with this company, or are they in some kind of complex pullback? And then once you've identified everything fundamentally, you say, okay, well, everything looks good. Let's check the chart. You do your chart setup, you come over and you see that you're trading above the 200-day SMA. Then you can say, hey, that bullish trend is still intact. That is an extra confluence to stack against my trade. Now, alternatively, what happens if we are trading below the 200-day SMA? Because I don't consider this to be something where, oh, we're trading below it, immediately the trade is canceled. Let me find you guys a good example of that. I'm going to go back to SoFi, and then we'll come back to Bloom Energy to continue this. But as you can see, SoFi was trading very much off the above the 200-day SMA, and we are now trading below it. So SoFi is a stock that I'm personally bullish on. I'm selling cash secured puts on it, very often, and I have a swing trade, as you can see from down here, at about 15.7 average price that I've been in the trade. And so very happy. I like SoFi fundamentally, but I didn't kill this trade just because of the fact that we were below the 200-day SMA. This is an extra confirmation for me to say I need some sort of fundamental confirmation in this position to actually take it. It's just more of if we're trading below it, it is more of a warning sign for me to say, what's going on here? Should I actually be taking this trade? Is something fundamentally different in this company that why we are trading below this 200-day SMA. So in a case of SoFi, where I'm confident in the fundamentals, this doesn't change a lot for me. This is me going, let me go take another look at the fundamentals and make sure everything looks good. Once I do that and I'm happy with the outcome of it, I can place that trade knowing very well we are below it. I think another example would be on IREN, where we were trading below it. We came in, we broke it. We're trading very far off of it right now. And, we want to see us get back above that. But this is one of those positions where, we came above it, came below it, bounced off it. Now we're trading below it again. So IREN hasn't been doing anything for a while. It's been crazy volatile. We don't have to jump into that, but specifically on this chart, this is where you want to see more of a reclaim of the 200-day SMA and then a continuation past it. This gives us the confirmation of, yes, we've finally broken that bear trend here, and we are going to continue higher. So that is something that I would really like to see with a lot of names, and that is something I'm very cautious of with the 200-day SMA. When we're trading above it, like right here, this is where I entered that's where I got assigned my shares, and we were trading above the 200-day SMA, so I was still very bullish on this stock at the time, and obviously we dropped way below it, and we came way below it. We finally broke that trend, came back down, and I'm going to assume this is where we continue higher. IREN has earnings in 2 days, so we'll see how that goes. But overall, it is just a trend confirmation for me. Anything above it, I'm like, hey, I really like this. Anything below it, it is one of those things where I just need an extra level of confirmation. Nothing too crazy, but it is one of the bigger indicators that I pay attention to. I do really like using it in a lot of scenarios. It's just more of an extra confluence for me, whether we're bullish or we are bearish. Now, the next indicator we are going to be taking a look at is the support and resistance levels. I just switched off Bloom Energy specifically back to SoFi because SoFi has a lot more support and resistance. But jumping into this, support and resistance levels is where I frame a lot of my positions at, and I use them for a lot of context in the market. So obviously, everybody knows this already, and I hope you do. If you don't understand support and resistance levels, please go watch a separate video. I'm not going to dive deeply into that. Overall, I will say support levels, just a place where buyers seem to be stepping in. Resistance levels, where sellers are more in control. That is just about the length of explanation I'll be giving on support and resistance levels for this video specifically. But when you mark them out, you can literally see it. You can see resistance, 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 resistance at all these levels right here. You can see at some levels lower, you can see support bounced, we came through here, bounce. So you can see, you can draw them manually. I just prefer using an indicator because I just couldn't be bothered to actually draw them out myself. Maybe you're a little bit more accurate than these ones, but I love this indicator. I've been using it forever. I trust it at this point. So all these indicators are free on TradingView, by the way. So if you just search up 200-day SMA support and resistance, I think it's called SRVR2 for the support and resistance levels one that I use, and then the pivots. I think it's just called pivots actually. So that's pretty straightforward. That's if you want to add any of these to your own chart, explain or experiment and play with them. But Overall support resistance levels. I use these religiously because I will say a lot of my entries, options and swing trading all go at levels of support. So you guys know my strategy by now. Obviously 10 to 15% off the all-time highs, 5 to 10% off the most recent high, tapping into a key level of support. And that is where I start to frame a trade around. But I don't just enter, right at this level. The level has to make sense for me where I'm comfortable owning the shares at. So say I wanted to open a swing trade versus like my option selling. My swing trading is I like deeper price action. You can see like where I entered, my swing trading position all the way down here versus I have a cash secured put sitting at 17.5 right now, which is right under this level of support. So my options trades, I will say, are much closer to price, while my swing trades, I like those deeper entries. So if I was looking for a level to enter for a cash secured put, this is probably around the area. Like I said, I'm literally selling this right now this week, versus I would look for a level between these two support levels for a swing trade, which I did, and this is where I own the shares at. So that is obviously down to personal preference, I will say. Me in particular, that's just how I run it. I like closer strikes, obviously, for good premiums with my options account, and I like deeper entries for my swing trading. But all that is framed around the support levels. All my entries are only at levels of support or in between levels of support. You'll never see me taking a cash secured put with no support levels underneath it. A good example of that would be on OKLO. They are rallying insanely hard this week. But the thing is, with OKLO in particular, I wanted to sell a 40 strike cash secured put, which is this support level right here. But there is no support levels underneath us. So this is kind of like last line of defense here. So I like seeing multiple levels of support for me to train to help assist my trade and be more of like a defense, because if this is the last level of support, what's stopping us from just trailing all the way down before we start building some more structure? Then we get a new level of support that we continue off of. So I've been selling puts on OKLO for the last like 2 weeks. This is like the first week I actually didn't do it, and you can see we're up almost 12% today, which is absolutely unreal. I love to see that. But in particular, I actually elected not to sell a cash secured put this week. It was going to go at a $40 strike price anyways. You can see from where we opened at the start of the week, that from the high of that candle all the way down is going to be about almost an 8% drop in one day. Obviously, this has recovered roughly 12% as of right now from today alone. But just having this one level of support here, I like seeing multiple levels below it. That is just my personal preference. I see support levels as, your entries, but they're also lines of defense. So if I go back to SoFi, and you can see where I've placed my cash secured put on this particular stock, you can see it's right below this level of support. It's between these two levels. So assuming that we come down and assign myself the shares at this area and we continue down, we have this level of support to bounce off of and continue, then use this again and continue up. In more of a worst case scenario, we come all the way down from here, assign, we bounce off here, we come here, we do a little bounce, slice through, we have another support level below us that we could rebound off of. So this is just how my personal opinion and, trading comes into play with these. I like seeing a lot of support levels at the lows. I'm just a little bit more cautious with other examples like OKLO. Like, I like it fundamentally personally, but when there is only one support level, I'm not really about it. It's one of those things where everything fundamentally has to make sense for me, but also from a technical perspective, the chart has to make sense. The fundamentals tell me what I should be buying or selling, and obviously the chart tells me where I should be doing it and where the safest place to do that is. So I like seeing a lot of support levels below me with no matter what I'm doing, whether it's a swing trade or selling options. Resistance levels, obviously, I actually like using resistance levels as to where I place my covered calls in particular, and obviously for my TPs for swing trading. I really like resistance levels for those areas because these are levels that we could straight bounce off of. So for swing trading, it's nice to kind of pull profits at those levels before, we have a pop, and then we can, have to make our way back up, and, we're kind of fighting our way back up. So I will say for swing trading, it's nice to use these levels for take profits. For selling options, I'm much more of a, I set my expiration at resistance levels because if we bounce off of it, come down, I'm just reselling that call before coming back up. So it's not a huge deal to me. It's just like a good point at which I can, visually see where the market could have a reaction off of, and then I set my positions around them. Nothing crazy. I'm just very aware of resistance levels and how the market has reacted at these levels before. Like this 19.7 level, insane resistance level. You can see this 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. I sound like Tory trades right now, but oh my God, you guys can see the absolute, resistance that we have at this level. So once we clear that, you can expect us to have a little bit more of a bullish push. All right, so heading back over to Bloom Energy for the last and final indicator that I use, it's going to be VRVP, or just the volume profile, volume range profile, whatever you want to call it, but it also has the point of control stacked in there. Now, this is a great indicator that I've started to use. Personally, I didn't really start using this until recently, but what I've started using this for is using it to validate some of the levels that I already have marked out and that I'm looking at. So basically, volume range profile is just an indicator that displays the trading volume at specific price levels. So you can see right here, point of control also is a really, really cool one. This is the level with the highest volume traded in this selected range. So as I move this, obviously that point of control is going to change. It just shows exactly where the highest amount of volume was in the range that we're looking at. And you can see right here was the highest amount of volume. You can see it's visually, this comes out the farthest, named where this is where the most trading volume occurred at. And you can see we had a massive impulse from there. Obviously, this is probably from the earnings. And I also have a alert set here, because if Bloom Energy came down to this level, this is probably where I would seek to buy more, seeing how if we do hold this level, there is obviously some aspect of seeing how levels are reacting, or the price is reacting to levels. But overall, this is why I personally love it now. This helps me validate a lot of my support and resistance levels. We can go back to SoFi because there's a bunch of support and resistance levels. I just want to show you that point of control over there. But you could see this support level has a lot of volume right at it. This support level doesn't have a lot of volume around it. There's a little low pocket here. So this is where I would suspect that this support level wouldn't hold on very much, and we'd come down to this support level, because as you can see, we don't have a lot of volume in this area. There isn't a lot of trading volume here. The trading volume picks up right here. So these levels is where I would be very interested in. So we have the point of control here, which is the most trading volume in the selected range, which is right here. And we have a good support level. You can see how much more volume there is at this support level than there is from here, obviously. So coming down again, this support level doesn't look like it has a lot of volume here. So this has helped me try to validate a lot of my levels in a better way, where I'm not just saying, oh, I'm trusting this line on a screen. This is a little bit of extra confirmation for me to say, hey, there isn't a lot of volume at the support level. There is a lot of volume, however, at this support level, and so I would be more inclined to place a trade at this level. So this is more so, I would say, for swing trades. With option selling, it's something I would be more cautious of, because if I don't see a lot of volume where I'm putting my strike price, as you can see, we have so much up here, we could slice right through it. So it's just something I'm very aware of with my option selling now. For my swing trading is where that really comes into play, because I love those bottom tick entries basically, and just having price jump straight off the level at where I'm entering on. So specifically, if I was looking from a swing trading point of view, I'm trying to validate levels. Without this here, I see, oh, I like this support level. This one's cool. This one's really low. Where would I seek to enter a position off of? I'm going to say this support level, because we also have point of control right here. So the most trading volume, and there's a lot more volume here than at this support level. Alternatively, coming down here, there is like no volume here at this support level. There's no trading volume. So this is where I would seek to enter a position most likely, and then being very aware that this is a weak low, that if we came below here, we could just slice through it. So overall, that is a new indicator that I've started using just to kind of validate, and I really, really love using it. You can also use that for resistance levels, obviously, as well. We can head back over to Bloom Energy, and you can see right here, point of control is very strong. We have obviously compared to the support levels that would be here. So you could suspect that we break through, we could slice through there a little bit easier, turn that into a level of support, and then this is where we would have some kind of reaction at this point of control level. So again, definitely one of those things where, I'm still playing with it. I love it. I've only added it recently. Again, this point of control right here with the selected range is awesome. I love that. You can mark out like a good setup using that. You can see the 200-day SMA is right here as well. So this is a very strong level around these parts with the most trading volume. But that is really going to be it. Those are the 4 indicators I use. The pivots are more so for a visual aid. The 200-day SMA, more of a confluence thing. Support and resistance is very heavy for me, obviously, just because I place a lot of my entries or basically only place entries around support levels. Obviously resistance levels are what I'm very cautious of. And then using the fixed volume range profile, which I love this being anchored right here. If you want the indicator for that, it's VRVP. Absolutely love it. It's been a pretty big staple in my trading arsenal recently, but overall those are the 4 indicators I have. Some of you guys might think I'm armed with like this massive crime scene looking chart, but realistically I'm just using these 4 indicators, doing a lot of fundamental due diligence on these companies, and that's really it. So you don't need to crowd your screen with a bunch of stuff. You can, just have a few indicators that help you read the charts better and give you a better thesis from a technical perspective. But that's going to be it. If you guys have any questions, make sure to leave it in the comments, shoot me a DM, or, fire it in the Discord. Happy to answer. But with that, make sure you leave a like, subscribe, and I'll see you guys in the next one.